Right, recording started, and I'm now going to show Tom's screen. Brilliant. Okay, so I'll hand the microphone to Tom. Tom.
Yeah, hi everybody. Tom Williams here, speaking to you, as Peter said, from Worthing. It's a town on the south coast of England. It's not too far from the sea or the beach or the ocean, whatever you call it. And it's a little holiday town, but it's big enough to have everything, but not so big that it's all congested and you can't move around or do anything like that. So it seems to suit me anyway. It suits Peter and Rita. But Gavin, as you probably all know, is in Malaysia, Kuala Lumpur. And he did try to ring me 2 or 3 hours ago, but the line was so bad, we couldn't really have a conversation. But he seems to be all happy there. He's with Dr. Gary Dayton and, of course, Richard Bentnell, his partner. So that seems to be running quite well. But as far as we're concerned, we're here, we're jogging along, and all we can really see, I'm looking at the charts, and it seems to be, to me, that they're seriously distributing. Well, I say seriously, they are distributing, but they're holding the market up while they appear to be selling, because we've had a test or two and there's been little or no response to that. So really we're looking at failed tests. We're looking up thrusts. And is that a daily chart?
That's a daily of the S&P.
That's the Dow.
The Dow. Leave that up, Pete. Okay, so Peter's just put up the Dow Jones daily chart. And if we, I always look at daily chart. And lo and behold, there is what appears to be an upthrust. Well, not appears, it is. Now,
Potential buying climax.
Now that tells us, you're looking at the dialog box. Please study and read these dialog boxes, because somebody said people don't bother to read them. And you're missing out, because Philip Friston, spent a lot of time redoing all these, right? So we don't hold any secrets, right? So what we know is built into the literature we write, or those boxes, or what we tell you online here. We don't have any secrets. There are no secrets in the stock market. For the simple reason is there's too many clever people out there to hide secrets. And if you ever hear of people saying, oh, well, we know what the pit traders trade on, all that nonsense, then you know that you're being misled. There are no secrets in the stock market. If there is a secret, the fact is that you can read these charts. These charts is a language speaking to you. May not all be clear on one chart, but generally speaking, on all the different time frames, there's a lot of information when you look at these charts on these different time frames. Now, this is the daily chart of the Dow Jones, and this is definitely here, what's that called? A climactic action.
Potential buying climax.
Now, right, the computers says it's a potential buying climax. But I would say that, yes, it's definitely weakness come in. Why? Because first of all, we're overbought. We're above the trend line. That trend line's been running for a long time, and it's been serving us well. Widespread outlook on an increase in volume could be bullish, but you want evidence. But that appears to me like a markup on a narrow spread, close in the middle, and the volume is, for buying climax, should be a lot higher than that, I would have thought. Well, it would be. But there's definitely supply entering the market here, right? And so that was Monday, Tuesday, Wednesday. So that there was Monday. Now, if you look at our newsletter, we say that Monday, look out for a test, right? So there's Monday, that red bar. Sorry, that's it. Now, that is a test. Well, it's quite a good test, look, isn't it? It's down on a narrow spread, and notice there's no top tail to it. Always be highly suspicious of a test that's got what we call a top tail. In other words, it's high, is up here somewhere, because that's not a test, because when it went up there, that shows it could either be hit supply or no demand, and it hasn't done that. So that's quite a good test. Monday, look, narrow spread down, close more or less in the middle, and the volume is low. Now, when you see that, you would expect higher prices, and it has come up with a signal, which is understandable. No supply. Now, that actually signal is correct. There is no supply on that day. Excuse me. But if they are, don't forget you are oversold here. Overbought. I mean, I keep getting them mixed up. Overbought. You're above the trend line. You've got supply on the previous bar here. Right? So you've got potentially a sign of weakness right behind you. Look, slight increase, well, increase in volume, up bar, that is a sign of weakness, no doubt about that. Now, good. So Monday they arrive, they do this, they test the market. Now, that is a potential test. You would normally expect higher prices. Excuse me. But what happens if you don't get higher prices? Well, that means, it doesn't mean to say that the principle's wrong. It just means they've tested the market. They still are not happy. Perhaps they're holding the market up to distribute more. But it's these two up bars here are caused through that test. But they're a bit feeble, aren't they? There's not much to them. And the volume isn't exactly, no. The volume on that one isn't exactly fantastic, is it? Or that one. And the fact is they're up on kind of narrow spreads, closing off the high, look, is not good. So you might be warned, this is what we might say is a failed test. In other words, they test the market, and you should expect higher prices when they test the market. But if it's feeble like this, then are they holding the market up to try to sell more? Because there's definitely weakness there, look, and you are overbought. Certainly not the place that you want to go long on at the moment. But you wouldn't want to short it either at the moment, because I've noticed, well, you surely you have, if you ever see a test like that somewhere along the line, sometimes they use that test, right, so they can have a nice upthrust, and suddenly the market shoots up. Oh my God, I'm wrong, right? But it suddenly collapses, closes on the low, or you might even get a top reversal where the next bar collapses down. They use, the fact is that there's no selling pressure, or little or no selling pressure. There's always somebody selling, of course. But we're talking about the smart money. We're talking about traders that will throw 4,000 or 5,000 contracts into the arena on these deals. And it's that alters the balance of supply and demand. So at least when you see a test like that, you know the market's not going to collapse immediately, right? But you do get two up bars, but it's pretty feeble, isn't it? Now, this was yesterday. This is a daily chart. Now, that definitely looks like a test, doesn't it? And the volume is quite low. But keep all this in mind here. You've got weakness there, bit of a failed test there, what looks like no demand. This sits on top of the trend line, which is an interesting look. Now, are there any questions about this before we look at the intraday chart, see what's going on today?
Nothing at the moment.
Okay, so we're monitoring the questions.
You could read this one, Alan.
I can't quite see that. Can you read that, Rita?
Whilst we're waiting for any questions, Alan says about when you were talking about the dialogue boxes, Tom.
Yeah.
The dialogue boxes are extremely useful and a great way to master reading the charts. Great job, Tom and Philip. Thanks. Good. Thank you, Alan. Good. Chris asks Tom. Okay. There's two questions. Chris asks, what do you expect to happen next? And Jack asks, would you still hold or close a position here? So basically, what would you do if you were in a position or not?
Well, I'll be quite honest, I wouldn't like to be long at the moment. Although, if you look at the small time frames, you can easily do a bit of scalping. Because, you know, these markets do pop up and down for short time, which you can see on, I was even looking at the 2-minute chart I've got. That's kind of interesting as well. You can trade those for very short periods of time. But keep in mind, we're looking at the daily chart. We're looking at the overall map of what this thing is likely to be doing or likely to happen. So keep that in mind. I like looking at the daily chart initially. And then if I was seriously trading, I would certainly go down. Let's look at the hour chart, Peter, shall we?
Tom,
quick, yeah.
Ken asks, is the last bar a test or a no demand?
That's a test.
It's a test.
Yeah, so you would. But, you know, I think myself that they're holding this market up to distribute more on any up move. I do not expect this market to shoot on up a great deal higher. But on the back of that test, which was yesterday, Thursday, right, you would expect a attempt to go up today. But we'll have a look at the hour now.
Yes.
Oh, yeah, sorry. There you go.
Yeah, that's running live. That's 15 minutes. What would you like to see?
What's the hour?
Yeah, leave the 15-minute up for a minute. This is 15-minute chart look. Now, of course, we do have here one of Rita's favorite indications. That is, well, I mean, be quite honest, it's a sign of weakness, isn't it, look? I was going to say it's an upthrust because it looks like an upthrust. And I say jokingly, it tastes like an upthrust, smells like an upthrust. But is it a true upthrust? I doubt it, because a true upthrust comes after a sign of weakness. So you would expect the market to sort of gone sideways here with a sign of weakness here. And then when you get the upthrust. But this is definitely a sign of weakness, look. Whenever you see that, it's a sign of weakness. I'll press F1.
Supply coming in.
Well, actually, the computer's got it right. That's exactly what it is. Now, that's good, isn't it? Look, exactly what that is. And please read the dialog boxes. There's a lot of information on there. Right. It's supply overcoming demand. And that's wonderful. So you would expect lower prices. Well, you will get lower prices. I'll be very surprised if we don't get lower prices on that. Now, right, so you can see it's chopping around a lot here. Now, this is 15-minute, right?
Yes.
Yeah.
Now, I said last week, there is a sign of strength here, look. It's probably no supply, look. Okay, what's interesting is, I said, look, whenever you get a red arrow appear, what's that say?
Supply coming in.
Supply coming in, right, which is dead correct, look. Right, you know it's supply hitting the market because you've got this terrific high volume, look, or activity, and on that activity, look, it closed well off the high, right? So that is a sign of weakness, right, or appears to be a sign of weakness. However, you do got this bit of accumulation right behind you. Okay, well, I'm not asking you to recognize that, but what I'm saying, what I said last week was if on the very next bar, which is there, you get a test, this is a very good place to go long in a market because they're testing. The professional money have seen that. They've seen that supply. They're fully aware of that. So they want to make sure, and they test it, look. And they ram the market down, look, quite hard, close near the high. And notice there's no top tail, look, we're talking about. I would advise you to avoid bars that have got these top tails to them. Because as it went up there, you don't really know what's gone on, whether there's no demand or supply, whatever. But look, a true test is like that. They ram it down, close near the high, and lo and behold, although the volume's not pink, it's low-ish compared to this here. But it's not really low enough to be a real good test. So there is weakness in here, look. But we've come up with a signal, look. I'm sure it must say a test.
You can't see because of magnifying. Yes.
Basic test.
Basic tests. So they are. And as soon as you see that, you would expect higher prices. Okay. Was that it there? Yeah.
You have to go back. I think we've gone.
Oh, yeah, sorry. So I'm looking at this through a magnifier, which I believe you can't see. Am I still on the same time frame?
Come on, yeah, I think it moved. Come. Where were we?
15 minutes, wasn't it?
Yeah. If you just
Sorry.
demagnify for a moment.
Oh, that's it, surely.
Yeah, it's changed to.
Yeah, what happens is, yeah.
There you go.
There you go.
That's it. So what we've seen the upthrust here, sign of weakness, right? The market's on that, fallen off. Now, whenever you always know if the market's still weak or not when you see these upthrusts in the background. Oh, I can't get this. Yeah, I've got it. Okay, whenever you see a blue up bar, right, after a serious sign of weakness like this, right, you know if that market's still weak because that blue bar would be up on no demand. Is it?
Yes. Yes.
No, I've just stated that without actually, because my eyesight's bad, unfortunately, but there you are. I can see the chart, but I have a magnifier that I can use, which helps. That's why I need Peter and Rita on the controls. Okay, so you know that market's weak, look. You could actually short that if you want, if you like scalping, because you could short that because it's sure enough, look, it's gone up, the computer colored it pink. That means, relatively speaking, it's low volume. Don't forget, we're looking at relative volume. That's why we can get away with, as they say, murder with the volume, because we're not looking or worried about precise volume figures. And I'm sure Philip, if you ask him, he'll tell you that there's a lot of skullduggery going around with the volume, especially in the London market. They can hold it back, but we're not worried about that because we look at relative volume. They can only fiddle around with the volume so much, right? And that even estimated volume works with VSA. So whenever you see these no demand up bars like this, after you've got weakness, serious sign of weakness, look at that volume there. Look, there's definitely weakness there, without a question. All right, you can short that. No demand. It's a 15-minute chart. Look. Right, so it's come on down. You will see some sort of support. Now that's the bars I don't like. Look, that's what we're talking about, a top tail. It's a red down bar, look, yes. And the volume is not exactly high, but to be stopping volume, you need to see high volume or highest volume come in. But this is what I don't like. These, we call these top tails, because all sorts of things could have been going on there. And I'm sure if you look at lower time frames, you'll see that no demand would come there. That's why it came off like that. But there's not a lot of selling pressure on that bar. But as we move forward, look, there's no demand as well, look, on these up bars. Look, that is no demand. Right, so the market's then falling. Now it's falling at the moment. How long's that bar got to run, Rita? Can
5 minutes.
So never analyze a bar until it's actually finished, because all sorts of things can happen. It's 5 minutes to go, Rita informs me. And that information is where?
Oh, well, is it a 15-minute bar?
On the clock. Yeah.
We just know it's got 5 minutes to go because it reaches the half-hour mark in a moment, in 5 minutes.
Right, okay, okay. So, to me, that market still looks weak. And don't forget, it's Friday. Never trust the market on a Friday, because they like to put the odds as much as possible in their favor, what they can get away with, so that over the weekend, the newspapers, magazines, and mainly the television people will be looking at that, and they will get it wrong. Because remember, you know more about the markets than they do, without question. They do not know what you know. And over time, you'll prove that to yourself. Now, are there any questions about this?
A few things came in, and Mark, his came in actually by chance. Tom flicked over to the 15-minute. Mark did ask earlier, could you look at the 10-minute ES from the opening this morning? And Mark says, to me, it looks like there was heavy selling on the open. And yes, well, turns out Tom has confirmed that. Tom, that was the open. So Mark, Mark read that. Well, what, 10-minute, 15-minute doesn't? They'll be similar, won't they? Well, we'll just putting 10 minutes up. And also, while they're doing that, when you're on the daily chart, Tom, Philip has posted something, just a reminder that today is triple witching in the UK. The daily bar was up, closing in the bottom half of the trading range on high volume. That backs up what you said, Tom.
Right, good. So it's triple witching.
Triple witching. Do you want the mic? Yeah.
That's thank you, Philip, for that. Philip is a real expert. He's been at it for over 20 years. He makes his living from it. So if you've got any questions, he's the boy. He's your man, shall we say. But triple witching sounds fantastic, doesn't it?
Yes.
I mean, what a terminology, triple witching. But it still won't alter the balance of supply and demand. You haven't got to read. It's no good. It's all very well, but don't try to be too clever. I mean, even last week or the week before, Peter here, he said, well, isn't that because they've gone to lunch? I said, well, wait, hang on. Believe me, if there's big money involved, you don't go to lunch. Take my word for it. You've still got your eye on it, especially these days with your iPads and all the rest of it, which I don't use. But believe me.
Philip says he's never understood what the witching means.
Yeah.
Maybe skullduggery.
Well, it's like a spell, isn't it, witching?
Well, yeah.
It's like a spell. Yes, it's a wonderful word, Philip. And I'm glad you've tuned in. And we often have a laugh together, Phil and I, over different things. But triple witching sounds wonderful, isn't it? Marvelous. But don't try to read too much into what's going on, because you'll never find out the truth anyway. So it's a complete waste of time. All you've got to realize is, I mean, you've heard the term, I haven't mentioned it, the common operator, what they call it, the composite trader. Rita's telling me things now. Thank you, Rita. The composite trader. Well, I think that was original Wyckoff terminology, composite trader. And of course, what it means is that you put all these professionals, or smart money as Gavins talks about it, traders that can throw 4,000 or 5,000 contracts into the arena, and they do. And the composite trader, of course, is the composite overall influence these people have, and they can't hide the activity, and they can't hide the results of their activity. In other words, the price spread. And remember, weakness when it appears will appear on up bars, sorry. And when strength appears, it will appear on down bars. Because to enter that kind of money into the market, right, you have to buy on down bars and you have to sell on up bars. And you see that all the time. And you can see at the opening here, back here, that's the opening, is it? Yeah. Or near enough?
That's a big one here.
Yeah. Oh, that's it.
Well, yeah,
well, there's the sign of weakness.
Potential buying climax.
Yeah, it tells us it's supply overcoming demand. There's no question about that. Now, climactic action, I would, if I was to give an interpretation and say I was writing a book, I would expect to see weakness. Well, not necessarily too much weakness, but volume very, very high, be ultra high. And then they usually support the market while they're distributing, because that means that it's the end of the move and they probably can't unload all their holdings on one bar or one day even. So they have to support the market as they sell more on every wave up. Now this Weiss wave that Dr. Gary Dayton talks about, I'll be quite honest, I haven't made a great deal of study about that. But I know Wyckoff himself had what they call the Wyckoff wave. So it's probably a version of that. But we'll look at that over time. But I can tell you probably right now that you can't go far wrong by studying these bars and reading the chart like this. Now you've got to be careful when you see a sign of strength come in like this.
Potential stopping volume.
Yeah, potential stopping volume, because you've got weakness right behind you, look. Well, there. And that's got what I call this top tail we're talking about. It's not a healthy looking bar at all. Right? So we have what we call potential stopping volume. Now, that's probably correct. It's a 10-minute chart. And that's what moved the market sideways, look. So the next bar is no demand, look. So we really forewarned there straight away, look. Okay, we've got potential stopping volume, but we've got this weakness right behind us. Now, it's highly unlikely that they're going to move into the market immediately after these two bars with this weakness on. Highly unlikely. They may have bought there, yeah, a little bit. But then this next bar confirms the fact is it's no demand, look. There's the pink volume, look. There's the attempt to go up on this stopping volume. And that's why it never really went anywhere. You get these down bars here, there's not a lot of selling pressure. Well, that's because they could easily be holding the market up. And that's why it's gone sideways, like it'll even come off a little bit. Now, it's unusual to get two bars exactly the same, Peter. Is that right?
Very unusual. Well.
Oh, no, sorry. Sorry, it wasn't the end. Yeah. Well, okay. So, okay. So it's going up here, look. There's not really any real serious demand in the market, look. Potential sign of some sign of strength has come in on that bar. Right. It went down to fresh low ground, or at least down here, if we draw a line across here. Right. There it is. It's plummeted down back into that level there. And now if the volume is low, then you would expect an attempt to go up. And there it is there, look. It's not really low, is it?
No.
So there's still supply present in this market, although it's at the moment just popping up a little bit. But to me, this market looks weak. And I certainly wouldn't want to be long, to be quite honest. Now I'm going to look at a different time frame. I'm going to look at 15 minutes, seems always quite good. That's a 15-minute chart, look. You could draw a trend line if you'd like, Peter.
Yeah.
There, the first point is support. That's a traditional Wyckoff.
There and there.
Yeah, there, and the first point is support. Traditionally, that's what Wyckoff would be telling you to do. And trend lines do seem to work. Okay, thank you. Right. Okay. So it's a 15-minute chart. To me, it looks weak because you've got this in the background. You've got no demand up bars. Are these no demand?
Two preceding were, and then there's an increase in volume.
Yeah, it's more or less the same.
Yes, yeah.
More or less the same.
Yeah.
So they are no demand.
Yeah, really.
Yeah, so there's 3 bars here. Blue bars have gone up, but they don't look exactly enthusiastic for the upside because they're up on narrow spreads. They're up closing in the middle. But the main feature, of course, is you look at the volume, look, and there's not a lot of enthusiasm there seen, especially on that bar there, look, for the upside. You've hit the top trend line, that's why it's come off. So overall, I certainly would not want to be long. I think I'd be really pushing my neck out if I was long here. But if you see a nice up thrust or something, or another no demand up bar, then you could short that. Any questions, please?
Yep. Yes, there's a few questions. One from Stephen here. I am currently looking at taking a position daily on the YM contract, that's the Dow, at US Open 2:30, which is our UK time, and just looked at various time frames, but can only see a test on 2 minutes, and then up it went. As Tom just mentioned, a 2-minute chart, I'd struggle knowing which time frame to look at. What do you suggest?
Sorry, read all that again.
Okay, I'm currently looking at taking a position daily on the Dow.
What position?
What position, Stephen?
Long or short?
Long or short?
And then just confirm the daily chart. Is it the daily chart?
Is it the daily? Long, daily.
Right.
Well, you're pushing your luck 3 away.
So, okay, and really basically Stephen's asking, he has trouble what time frames to be looking at.
Oh. If you want to go long on the Dow, you're pushing your luck, I tell you. And the reason you can't find many tests because the market's basically weak. Yes. See, that's the problem with traders. If there's a weak link, with all due respect to everybody who's listening, it'll be you. I'm sorry, but that's how it works. And surely you shouldn't be thinking of going long when the market's overbought and you've got serious signs of weakness in the background, surely. I mean, you may get lucky and hit an up thrust where you cover, but even then you probably get caught. So what you need to do, you see, the problem with trading is the right time to trade is when the market's been falling dramatically. You see stopping volume come in. Then you see that stopping volume tested. But the news would be bad. Everything will be against you. If you mention to somebody you're looking to go along and say, oh, you're crazy. This market's weak. Look, it's falling. The news is all bad. But you've got to raise above that. You've got to raise your head and shoulders above all that. And to become a professional trader, that's what you've got to do. That's the time you should be thinking of going long. That's the time you see tests. Professional money can see it. And they have to get it right because otherwise they're not professional traders. They'll be kicked out of the market with losses. And don't forget, there are no friends in the market. I keep saying that. But why consider going long? What time frame we got up now, Peter?
This is a daily of the...
Now we've got a daily chart here of the Dow Jones.
Future.
Of the future.
It's alive right now.
Right, it's running live. Right, but if you looked at the S&P 500, which will mark the direction of all these indexes, to me, they look like serious sign of weakness present, and they may be holding the market up. But you don't consider going long, surely, when the market's overbought and you've got signs of weakness there.
But Tom, you often say that when the market has risen, it's got a potential for going back the other way. It's liable.
Well, yeah, vulnerability. You see, when you get these up moves, from there to there, right, the market becomes vulnerable to professional money in there saying, right, I think we better unload some of our profits. And this is where they unload. And even that bar there, what's today? Friday.
Yeah, it's today, yeah.
So,
So far.
so far, mine's it's a lot to go yet, but it certainly doesn't look very healthy at the moment, does it? But you do have a bit of a test. Well, it looks like a test here, but the volume is not low enough to be, I wouldn't have thought it's a real happy, successful test. But surely you must get your head around. That's a big problem, you see, is that when the right time to actually enter the market long or buy, then are you geared up at that moment to receive that information? Most traders aren't. Majority of traders are not, because they say, well, why on earth should I buy now? They don't look at the volume. They haven't seen the stopping volume. They haven't seen the test of the level. They say, well, the news is bad. Look, the market's falling. It must be mad. I'm not going long. But that's what you've got to get your head around. And if you want to become a professional, you must get your head around that. And but don't do anything unless you see the principle, clear principle. Now, I was looking at the 15-minute earlier on this morning, and I must admit, it was chopping around a lot. They looked like some signs of strength, and then lo and behold, it was immediately followed by no demand, and so on. So it's not all that easy, but Friday is not an easy day to trade. Monday would be a better day, or Tuesday, because Monday you can usually read the market on the Monday to see what the professional money are looking at. Have they tested the market? Has it gone up on no demand? Is there a test followed Tuesday? There's no result from that test, which is a sign of weakness. Have you got weakness right behind you? Which usually you have. So these are things you've got to get your head around.
Yes, Stephen says, maybe I'm looking too short term. From my opinion, it depends on what you're looking to get out of the market, how many pips, that points or whatever you're trying to make. And so when Tom says, look at what the market's doing on a Monday, well, often it does test, or you see something going on. Often Peter will actually say he'd avoid the market on a Monday intraday because it's chopping it sideways, and you can kind of see that they are testing it. Not always, but they often do. But if you saw something like a test on a Monday, then you know that the market is possibly bullish. So then the next day, if I'd seen a test on the Monday, the next day I'm looking for confirmation in a lower time frame of strength. So if I see a test in the hourly or confirmation of strength, then could go long. So it's difficult to know. I mean, then there's people who are scalping even very small time frames, and they may look for strength or weakness in an hourly time frame, and then looking for confirmation and a good entry point in, say, a 10-minute or a 5-minute. So it all depends, I think, on what you are looking to get out of the market, what your particular strategy is. All right. Are you still on that chart, Tom, that we were on? Oh, there was a question on what was it, that chart we were on? Was it the daily? Down. Can we just a quick question on that daily on there? This one here, this one here. Harvey says, what can be said about the seventh, that bar with the widespread and very low volume? Well, that volume looks a bit odd. Yeah, Tom, we think there's something wrong with
the volume.
yeah. We can't explain. We just think there is something wrong with it.
Definitely, volume will not look like that.
No. Okay, Raphael. asks a question here. Oh, hang on. Mark says that was rollover day, not accurate volume for the bar. Philip says the volume is incorrect. It has rolled over to the new contract at the wrong time. Oh, good. So there's some answers. Thank you. Blame e-signal. Okay. Right. Rafael asks, do you prefer to set profit before taking the trade or trail it during an open position?
What's that?
Do you prefer to set a profit target, I assume, a profit target before taking the trade or trail it during the open position?
Well, you hear people saying they have profit targets, but I've never done that. I mean, why should I limit the amount I want to make? I want to make as much as I can squeeze out of it. So
you can call it limits.
Mhm.
They even call it a limit order.
A limit order, yeah. I mean, I have met 1 or 2 traders like that who, as soon as they make $200 or $300, they're out. At least they can say, right, I've made something out of it. But most of them wish they'd have stayed in longer, and that's why we've got this trending system. Now it starts off here, look. Right, say you've got in here on the low. Right, now this bar here is what Gavin would call a gotcha bar. That's done deliberately. Don't think that's something to do with the market. It's the professional money know that's where you should have entered. And what they do, they have a wide spread up close near the high to put you off, because then you think, oh my, I've missed that now. So you forget about it and do something else. So that's done deliberately. So that's confirming the strength behind you. And there's a down bar. There'd be a test look. Right, it's little or no selling pressure. So the trending system tells you that all the time the bars are blue, you stay long, ignore level bars, and allow for 1 down bar, especially if it's down on low volume, look. And the trending system will keep you in, look, blue, 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 a lot longer than you think you will. You know, even around here, look, if you follow that, you're still long. But then your skill as a trader will have to come into play. But at least you would have stayed you in a lot longer. If you have a profit target, you'd probably get out here somewhere. It's all very well, profit targets. But then the hard work is spotting the trade, getting into the trade, and then once you're in, you want to try to squeeze as much as you can out of it. Now, I've got even a 2-minute chart running here, look, which I think something Gavi was looking at when he was here. Right? There's a 2-minute chart, look. Now, if you want to talk about scalping, excuse me. Now, there's your stopping volume. Now, it's only 2 minutes. Right? It's sort of, it's got a bit of a top tower, which I don't like, as you know. But the main thing is it's fallen down. The low is the fresh low ground. The volume is very, very high, look. And on that volume, or on that activity, it's closed in the middle. That is a potential sign of strength. If you see a test now, then we talk about scalping. You can go long. I mean, that's very low. But here's a real test here. Look, this is a proper test, look. And that's why it's gone up. It's gone up there because of that. But that's if we talk about scalping. But overall, I feel myself this market's weak. Any questions, Rita?
We were talking about that volume bar earlier, and Peter says the daily chart of the YM shown in this presentation is probably not quite correct. The reason is the allocation of volume bars to the corresponding price bars. On the e-signal data based charts for futures contract, there is a 1-day delay. And he puts a link there. You know about this, do you, Peter?
Yeah, but that's why you shouldn't look at the daily on the futures properly.
He says that's why we shouldn't look at the daily on the futures properly.
You may notice.
Hang on.
Despite that.
You are. No, yours.
Right. Yes, I've heard that several times, and I've no idea if it's true, but I assume it's true. So that's worth pointing out, simply because you can be fooled into looking at the daily on the future, and actually, according to many, and I haven't seen it from the e-signal, but from many, that it's actually inaccurate. The volume is delayed.
Well, that's definitely inaccurate.
And Tom says that's definitely inaccurate then if it's delayed. So on the live intraday, shall we assume then that they're putting up correct data for that? Well, they don't, so they don't, I assume. But certainly on the daily, yes.
Okay, Robert has a question. Peter says intraday is okay. Thank you. From Robert here. When price moves up, then pulls back and volume dries up, how do you tell if this is lack of selling or no interest in buying? And he talks about a stock, NWN. Can we put that up, Pete?
Sorry, say all that again.
Okay, when price moves up and then pulls back and volume dries up, how do you tell if this is lack of selling or no interest in buying? So he says in the New York NYSE, Peter. Oh.
Is it there?
NWN?
NWN, yes. Oh.
That's the daily Dow.
Let's have a look.
We'll see if we can get it.
Dow.
Is
That's the daily of NWN.
okay.
We don't have the intraday.
So Robert says September 17 area.
17.
Oh, there. It's that bar there.
That one there. You can see that right, Tom.
So, okay.
Now,
Tom.
what's the question?
Okay. When price moves up, then pulls back and volume dries up, how do you tell if this is lack of selling or no interest in buying? Well, yeah.
That's not that witching day, is it?
We'll be bewitched.
No?
That's day, isn't it?
Well, you don't read the whys and wherefores into these charts because you'll never be told the truth, you'll never hear the truth, and you'll never find out the truth. So you've got to believe the chart. You've got to believe the fact is that the market does move on supply and demand. Now, this is an individual stock here. Don't forget you trade in harmony with the index or the parent index. So you can't expect, well, we are looking for stocks, individual stocks that are acting stronger than the index. But this one certainly isn't, look. This is acting weaker than the index. What index is it on?
Well, the New York Stock Exchange,
The Dow.
Yeah.
So, okay. Now we know, we've just seen that the Dow is overbought. Now this is acting weaker than the index. So it's certainly not the sort of stock that you want to rush in and buy. This is not a good candidate for the up position, the long positions at all, right? It may be more of a candidate for short position if you get an up thrust, but you've got to believe the chart. You'll never be told the truth. You'll never find out the truth. Even if you could pick the phone up, speak to a specialist on the floor of the New York Stock Exchange, they're not going to tell you the truth. Why should they? Why should they tell you everything? Why should they tell you what they're doing? They won't. And if they do say anything, it's probably lying to you anyway. Now, I say that seriously. Now, but you've got to believe the chart. Now, here, right, we do have a down bar, look, and the volume is low. And it's enough to produce a signal.
Test.
A test. It's not a fantastic test, because real good tests, right, but the volume is low, but it's not to do with that witching day, is it, or something? No.
Well,
no, it's way off.
Yeah.
But if that's a true test, and do you do have a bit of support in the background, right? But don't forget, you trade in harmony with the index, and you need a stock to go long, acting at least as strong as the index. But this is clearly acting weak in the index. But you do have a test, and it did respond somewhat to that test, but not really in a way that's probably going to interest you all that much. So you shouldn't look at stocks like this, because they're acting weak in the index, not to go long anyway. Now, if you saw, like they do, they have those tests, like you saw there, and sometimes they take advantage of that and create an upthrust. That fact is, there's no selling pressure there. That's what it is. There's nobody selling at the moment. And that's probably because the market's gone up, and they're not trying to fight. They're not fighting the general flow of orders in the market. But sometimes they take advantage of these tests, and they have a nice upthrust to really throw you. But that's acting weak in the index. So it's not the sort of stock that you want to go long on. That makes sense?
Yeah. Okay, Julio would like you to look at Apple. So Peter's just putting, there you go, there's Apple. That's the daily, end of day of Apple. Tom's just studying, perusing the...
It looks like a shakeout there, doesn't it? The gap up, that's strong, isn't it? Well, we've been looking at Apple for a long time, and we know it's a market leader. Now, that's what I'm talking about, a stock acting stronger than the index, look. I mean, that responds to a movement in the stock market. Excuse me. And that gap up, look there, would be the day we saw that widespread up. It's hitting a bit of supply, a little bit of no demand, it's rounding over a bit. But this will trade in harmony with the index. And the index itself looks weak. It certainly looks as if they're holding it up to distribute more. And therefore, a stock like this, at least is acting as strong, if not stronger than the index. And this is when you see a sign of strength of any sort in the parent index, the Dow or the S&P, right, that will go up. And that's the sort of stock I'm talking about. That's acting strong in the index. And this looks like a shakeout along here somewhere. It is. Right. This is a shakeout. Whenever you see these signals like this appear.
Stopping volume.
Yeah, that was on R. Now, yes. Yes, hang on. I just wanted to look at that a bit more closely. There it is. Right. I mean, technically speaking, this is one of the signals that I haven't had a chance to get around to. Of course, that strength actually came in on this bar. Strength, when it appears, will appear on down bars. This up bar here is responding to that. And the computer, because I've been unable to have Philip Friston has either the access to programmers, so we can't change that. But that signal should be on here. But that's the response, widespread up, close on the high, and that's what we call confirmation of the strength on the previous bar, and that's why it's gapped up like this. Look how it gapped up. The spreads are getting narrow. Looks like a test there. Is that today, Friday?
Yes.
Yeah. Yesterday, Thursday.
Oh, that was a daily chart.
End of day, yeah.
No, it's end of day, sorry, yes, okay. So that definitely looks like a test yesterday. We'd like to see the volume a bit lower, right? But you're probably going to get higher prices today on that, Apple. But to buy these, to go long, you have to train yourself to get in on the lows. Don't get in when all the rest of the herd's rushing around. Start buying on these tops. Not if you want to stay in the market, because you can easily, you get swept off your feet. You go long, fair enough. You're trapped in there. The market suddenly turns around, and even Apple will fall with the market. And then you're what we call a weak holder. In that a weak holder is a trader that if he sold right now, he'd be losing. And we know that the herd does not like that, right? But that's why the market trends the way it does when it starts trending down. You see those red bars, because they do not want to give you any breathing space to get out of a poor position. And that's why they do it. The same with the long positions. If you're short and the market suddenly starts gapping up like that, right, you've become what we call a weak holder.
Philip says that he thinks this signal here was a 2-bar signal.
Ah, that right. Philip Friston said he thinks that bar at the bottom is a 2-bar reversal.
2-bar, yeah.
I don't have an intraday chart, do I? That no. But yeah, it's quite possible. Look at all these different time frames, but the daily chart gives you an overall picture of which road you're on, which way you're going. And rely on the charts. Charts don't lie. Rita's changing. I don't know what are you looking at?
Well, we've got just 2 questions left now.
2 questions, right. Rita, read them out.
Just read this, just to say. I'm going to finish in a moment, but Mark would like you to look at this. This is a 5-minute ES before we leave. And whilst we're doing that, Chris asks, can you please ask Tom if he has ever used or considered the pivot points in the software? I've never heard him mention them, so why are they there?
Well, the trouble with all these pivot points, I hear, now admittedly I don't use them, not because they're no good. I hear they're very, very good, especially the ones in VSA or Trade Guider. In the past, you see, we've had some very powerful expertise, like professors of mathematics and people like that working on this program from Oxford and Cambridge. And but just because I don't mention it, it doesn't mean to say then they're no good. I don't mention things like you never hear me talking about these mathematical formulas, because when I trained, the syndicate that I was working with never used them. And I suppose it's like, you know, how you're brought up as a child, so you stay like that most of the rest of your life. It's just sort of, but pivot points apparently are very, very good. And I would have thought that Philip Friston's a far better guy to ask about pivot points than I am. He's into all that, I believe. What was the other question?
Just comment on this is the 5-minute ES.
Right, we're looking at a 5-minute E-mini chart here. And you see, the trouble is, see, there's still weakness here, because look, it's a blue bar, up bar, admittedly, but the volume's too high. We want that stopping volume on the previous bar. Although there's a sign of strength appeared. What's it say?
It says basic tests.
Basic test. But don't forget, you look at the computer. Oh, here it is. Right. It's not a test really, is it? The volume's too high, look. The volume's too high. And it's high and up bar. That means that there was some supply up here. Right? Sorry. And that's why it's no demand, look. Professional money saw on that previous bar. But
The dialogue box says something quite similar, actually.
Oh, does it? What's that say?
This is basic test. I was thinking of the other one.
All right. But read those dialogue boxes, because generally speaking, they're mostly right, correct? Thanks to Philip wrote most of that. So what's wrong there is that high volume would be fine if it was, say, on that bar. Right? But it's not. It's on that bar. Weakness, when it appears, is liable to appear on that bar because that's where the supply came in and hit the market. Right? And that's why it hasn't responded very well. Now, if that volume gets really low, even here it's not low, that's low volume there. But no, this is still more or less confirming what to me looks like a weak market. And don't forget it's Friday. And this even looks like a small upthrust there, look. That black bar, look. There's no signal on it. There's some sign of strength came in here, but there. But to me, overall, that looks weak. And it looks mainly weak, because I don't like this high volume on this up bar. Right? And every time it tries to test, look, the volume is not low. It's not pink. There's an upthrust, small hidden upthrust, really. It's difficult to see. This overall market does not look fantastically strong to me at all. And you would not, if you're going to trade stocks, remember you want to look at stocks like Apple that are acting stronger than the index. But then you trade in harmony with this index. And this index is showing weakness. So it's no good going long an individual stock if this parent company here, the parent index, is looking weak. Anyway, I'll say thank you very, very much for listening. And thank you to Peter and Rita, who are digitally working here, pressing all the right knobs. So I'll hand you back to Rita.
Thank you, Tom. And thank you, everybody, for your questions. We're going to be back next Friday, and we are going to be starting at 5:30. Is that correct, Peter?
Yeah,
and we're going to
the
change.
dates changed on GoTo
yes,
webinar and the VSA Club.
we'll get the dates changed on the GoTo webinar and the VSA Club. We're going to do the newsletter this Sunday. And Thomas asks, can something be done to get the video archives up faster? Yes. Peter, what happened last week? Is it there?
It is there now,
It's
yeah.
there now, but obviously there was a problem.
Initial hiccups where I had to liaise with Trade Guide. That took a bit of time.
Right, there was a problem. Something had changed, so he had to. Stephen says, "Drunk again, Peter." No, it wasn't that.
It wasn't me.
Maybe someone at Trade Guide it was. Yeah, it's the other end usually. They there was a problem. Something had changed. So we can't promise, but tonight we're going to do our utmost to get this archive up straight away, or within the next hour or two. So that's it for this week. Thank you very much, and we'll see you next Friday at 5:30. Thank you. Bye-bye.